Hello, everyone. This is Kathy. If you can hear my voice, see my screen, please let me know. I want to make sure just check to see my webcam. Hello, everyone. Welcome to Kathy's Caffeinated Market Buzz for our Monday morning. Let me just make sure everything is working the way it should be. And I want to make sure I've got the YouTube chat up. But yes, if you can hear my voice, see my screen, please let me know. Thank you, Cheryl. Thank you, Paul. Thank you, Becca. Abundance. Good morning, everyone. Welcome to our Monday morning caffeinated market buzz. Okay, so this is going to be a very, very busy week in the financial markets. I think my screen's looking good. So yes, it's going to be a very busy week in the FX market, and the stock market, and the bond market. We've got a tremendous amount of market moving economic data. We didn't have much last week. We're not going to have much next week. This is the main week in February where we're going to get significant data. Now, the two most important pieces of data is going to be the U.S. retail sales and the U.S. inflation report. But that's not all. We've got GDP reports from many other countries that we'll talk about, and all of that could have a significant impact on the markets. On top of that, we have the Lunar New Year holiday, where a good portion of Asian markets are closed, where we basically have Chinese markets closed until February 19th, I believe, until Monday. So the markets are, definitely going to be lighter in terms of activity, but that, it does not necessarily mean we may not get some big moves during the New York session. Now, taking a look from a bird's eye view of what's happening in the U.S. markets and the U.S. Dollar. In general, I am bullish U.S. dollars. We have been talking every single week, and at my Caffeinated Market Buzz, I go over my heat map and I talk about what my views are, and then we go over the economic calendar, some charts, and Boris will come in and I'll talk a little bit about his views. But in terms of the U.S. dollar, generally speaking, it's hard not to be bullish U.S. dollars because U.S. non-farm payrolls was good, the Federal Reserve's less dovish. The market is still pricing in over 100 basis points of rate cuts, with the first move happening in May. So the idea here is that the expectations have moved from March to May, and yet the dollar is higher, but it should actually be trading higher than that given how strong data is. And a lot of that hesitation, I think, may have to do with this week's reports. Now, we have the inflation report. Last week on Friday, the US dollar sold off after we got the weaker CPI revisions. Now, many people were asking me, how could I have known this? It wasn't on any of the economic calendars, Kathy. Where could I have found this information? And you're right, it wasn't on any of the economic calendars. Many people weren't anticipating it, but Forex Live was talking about it. They were talking about how it was coming. I also like to read Mark to Market, and that also talked a little bit about how the CPI revisions was going to be a big report. And so it was happening. And if you keep track of some of the major X feeds, you would have known. Anyway, this week's CPI report is expected to be softer as well. And, it's because we had gas prices come down a little bit. The strong dollar is also putting downward pressure on inflation. So the market is looking at the possibility of some softer U.S. data, particularly retail sales, because auto sales were lower last month. And also we had gas prices fall, so both of which is negative for retail sales. So the prospects, the dollar has come up quite a bit. I still think there's room to rally, but the prospect of weaker data this week could limit, could cause a bit of profit taking in the US dollar. Now we don't just have that. We have the Empire State Survey, the Philly Fed Survey, housing market data. The last Empire State survey we had was really, really weak. It went from like -15 to -40. So there's got to be some sort of snapback. And that number could be slightly better. So what I'm trying to say is that I think this week's U.S. inflation report and retail sales report should drive the profit taking in the dollar, but it's not a done deal. I think that you could still see a bit of weakness in, you could still see a bit of strength in U.S. data, particularly on the perspective of, especially on the perspective of the manufacturing data, along with some of the housing market data, because the interest rates in the U.S. have come down a bit, and I think that that is going to be helping to boost some of the housing market activity. So that's what I'm looking at in terms of the dollar. Euro, I'm bearish. Euro is under pressure. BK traders, I just put on a fresh Euro trade. Make sure you look at the stream. My main views today is I really like being, we're short already Swiss yen. BK traders sold Swiss yen at the start of the New York session at 170.25. And you can see that we sold Swiss yen. For those of you that don't know, I trade the New York Open and the Asia Open. So that is about 6:30 a.m. New York time is when I put out my New York Open trades. 8 p.m. is when I put out my Asia session trades. So we sold Swiss yen at 170.25. We're in this trade. I like it a lot. Euro dollar, I also like to the short side, but we'll talk about that later. So anyway, this week we have two main pieces of Eurozone data. We have the Eurozone ZEW survey, which is coming out tomorrow, and we have the Eurozone GDP numbers. And the ZEW survey, the stabilization of the markets could help lift sentiment a little bit, but the really big worry is the GDP numbers for the Eurozone and the UK. This actually should say bearish. I think I just had a typo there. I'm actually very bearish, the British pound. I'm going to fix that in a minute. But what I want to say is that we are basically bearish euros because Eurozone growth has been very weak. And this quarter's Eurozone GDP report is also expected to show GDP growth pretty much flat or maybe even a little negative, which would be really, really bad. But the market is worried about weaker Eurozone GDP numbers, and so I'm bearish euros. I'm very, very bearish sterling. This is a huge week for the UK. We have a lot of economic reports that will directly affect how the Bank of England thinks and what their assessment will be. We've got UK inflation, jobs, retail sales numbers, all of which I think is going to be bearish. And the biggest worry, as I said earlier, is the UK GDP report. That is expected to be negative. If we get last quarter was negative. If this quarter in UK GDP is negative as well, that would mean the UK is in a recession, and that would be really, really bad news. So there's a very good possibility we could see that turn negative and be flash recession signals, which would be very bearish British pounds. And I am very bearish British pounds this week. The Australian dollar, I'm bullish. I'm bullish Australian dollars for a couple of reasons. Number one, once the Chinese come back, the market kind of thinks that they're going to come back with some fiscal stimulus that's going to bolster the sector as a whole. And then secondly, there's the jobs numbers this week. And last month, the job numbers were horrendous, like the weakest outside the pandemic numbers. So a snapback is expected, especially since the PMIs, manufacturing and service sector activity in Australia improved. So there's a good chance that we're going to see Aussie employment numbers come out stronger. RBA also left the door open to additional tightening. So that's definitely a possibility of some Aussie gains. I am neutral to the Canadian dollar. We had stronger IVPMI numbers, but the labor market numbers from Canada were mixed. The overall numbers was good, but full-time jobs declined, which is not good. You want to see the best type of environment. You want to see overall job growth improve. You want to see the unemployment rate improve, which both happened, but you want to see that due to full-time and not part-time work, which is we did not see. So I'm actually kind of neutral bearish Canadian dollars. Oil prices are also down today, so that should put some pressure on the Canadian dollar on the downside. I'm also neutral New Zealand dollars. I'm actually neutral bullish New Zealand dollars. To be honest, I have no idea why the Kiwi is pretty much the day's worst performing currency. There's been no real New Zealand news. RBNZ or Governor Orr came out overnight, said, high inflation is a problem, said that, all the immigration is causing a housing issue. And the ANZ actually predicts last week, Kiwi did really well because ANZ Bank, a local bank, predicted a rate hike this month, which is overly ambitious in my opinion, but still, Kiwi should be neutral bullish. But today it's very weak. Because we could see some risk offloads. I'm sticking at neutral, but I'm actually neutral bullish. Swiss franc and Japanese yen, I'm neutral bullish as well, because I think that we could just get a bit of a correction in stocks, which should drive these currencies lower. Once again, welcome everyone to Kathy's Caffeinated Market Buzz. We had just talked about my general views in the market. Now we're going to look at the data calendar. So let me just refresh this. I have multiple computers. This is my webinar computer. We had no data released yesterday overnight. Chinese markets are closed until next week, so we could get a bit of lighter movements during the Asia session. And today's a very quiet calendar. We had nothing during the European session. We only have Fed speak, ECB speak today. Listen to those very carefully. They will be important. BOE Governor Bailey speaking later. Consumer inflation expectations could be interesting at 11 a.m. as a leading indicator for CPI later this week. Tonight, we have consumer confidence from Australia, which could be interesting. Business confidence. This will be very important for many things that we look for in Aussie data later this week. New Zealand also has business inflation expectations, which is quite important. None of these are big market movers for Aussie or Kiwi, but they do give us a lot of guidance to anticipate how future economic data could fare. Tomorrow is when the action heats up. We have UK jobs numbers, and according to the PMIs, both the manufacturing and service sector reported weaker job growth, and we had a huge drop in the KPMG jobs numbers. I think these numbers were very weak, and earnings in particular are expected to slow from 6.5 to 5.7%. Inflation numbers are due from Switzerland. That's expected to be softer. German zoo survey is due. It's expected to be firmer, but I don't think it's going to be a huge market mover. And then we also have the U.S. inflation rate. Thank you, Leroy. I did not expect, I'm not sure what you just put in there, but thank you so much for that. And so U.S. inflation data is also expected to be weaker. The monthly rate is expected to stay steady at 0.2%, but I think there's downside possibility. And then the annualized rate is expected to be very weak. The core rate, on the other hand, could be a little stronger. So we'll have to see how that fares. And then, that's the main focus will be inflation. And this could basically set the tone for the dollar for the rest of the week. And then on Wednesday, we have UK inflation data. And this number is expected to be very, very ugly, from 0.4 to minus 0.3%. Remember, the US number is expected to be pretty much unchanged from the previous month, although I think there's downside surprise. But we could see a pretty ugly UK inflation number. And so I think going long euro pounds could be a really interesting trade this week. Euro area GDP numbers are also expected to be softer, but GDP is backwards looking. Inflation is forwards looking for policy. And so I do believe that that is going to be something that is going to cause euro pound, or even like pound CAD, pound crosses, pound dollar, all to be interesting opportunities. And then we have PPI from the US, which won't matter at all. Japan has GDP numbers. Japanese GDP growth is expected to rebound. There's stabilization in the economy, consumption expected to increase. So this is another reason to be long the Japanese yen. So I like the Japanese yen quite a bit to the upside because there could be a little bit of risk off flows, and then also we could also see Japanese GDP numbers improve. Australian labor market numbers, as I said, these are the weakest Australian labor market numbers last month. in December since at least a year, and pretty much since the pandemic. And so a snapback is expected, particularly since all of the PMIs improved a lot in January. And then some minor data on Thursday, we have UK GDP numbers. This is another big problem. UK GDP, we could potentially get, UK basically in recessionary conditions. And so that would obviously be a problem for the Bank of England. And I think that, we could see 2 quarters of negative GDP growth, which would mean, because we only had 1 quarter we had 0 growth in Q2, minus 0.1% in Q3, and there's a good chance that we could get also negative GDP growth in Q4, which would put the UK officially at recession, which would be, I think, really bearish for the British pound. Swiss franc, nothing going on there. US has retail sales numbers and also negative US retail sales numbers. So we're looking for softer inflation. We're looking for softer spending in the US, which is why I think the dollar could correct. But we should get a snapback in Empire, which was really ugly, minus 43.7, a huge major drop the previous month. So snapback is expected. Same thing with Philly Fed. Industrial production doesn't really matter that much to the markets, especially on retail sales day. And then we have OR speaking, and then we get to Friday. Friday, we have UK retail sales numbers, and that is also expected to be ugly because BRC retail sales were weaker. So overall, weakness expected in UK jobs, UK GDP, UK inflation, UK retail sales. US end of the week is just building permits PPI. I think that's really not going to matter at all. In fact, the University of Michigan index could be more important. And that is expected to show a little bit of a recovery because NFPs were good and also because stocks have been really, really good as well. So all of that, I think, is going to matter more than the PPI and housing starts. So for the US, front and center is going to be inflation, retail sales, and the UMich survey, but also keep an eye on that Empire State survey. So now let's go to the chart. So I said that we were short Swiss yen, we're still short Swiss yen. I still like this trade, but let's take a look at the technicals. Euro dollar is below all of the major moving averages, and it's trading weak. US yields are down a little bit, which is not good for euro, but stock futures are also down. I think euro is going to underperform. I think euro is going to come down to 107.20s. Dollar yen, these are old. Dollar yen is above all the major moving averages. I think dollar yen's due for a pullback this week. And I think that it should pull back. I think it should pull back to at least 148 with US yields lower as well as stock futures lower. I think dollar yen should pull back because if you think about it here, we are also, this resistance, this level here is pretty much where we have support over here as well. And there's a lot of resistance above current levels, and this could be a near-term top as it was kind of a reversal point over here as well. So I think we could get a little bit of reversal in dollar yen there. Dollar Swiss, on the other hand, is on a tear, which is why Swiss yen has been doing okay. And resistance is up at 88 cents. Swiss inflation data is expected to be softer, so it's more. I think it's going to stay around these levels, be ahead of the US inflation report, and that's going to decide if it drops below this SMA or it heads up to 88 cents. Aussie is below all of the major moving averages, still finding resistance at the 100-day SMA. I am bullish Australian jobs data this week, so I think it's going to break above that and come up to the 65, 75 region, and then that will how it trades from there is going to be very much data dependent. But either it rejects this or it comes back into the zone over here. Kiwi dollar is I'm bullish Kiwi dollars. I think any pullbacks should be bought. I think that it should head back towards the 62 area up here in Kiwi dollar. Pound dollar, I'm bearish pound dollar, as I said. I think that it's going to come down below 125.50. Although I am more bullish. I think euro pound is forming a bottom here. I think that You can see that this is the same place it formed a bottom, basically in July of 2023. I think it's forming a bottom. I think the prospect of broad-based weakness in UK data means that we should see some more significant gains in euro pounds this week. And then dollar CAD, neutral dollar CAD. It's not doing much. It's trapped in a range. There's not much in the way of Canadian data this week, so it's all going to trade on the market's appetite for US dollars. So that's basically what I'm looking forward to in this coming week. I'd like to open up the floor to questions before any charts that you want to look at before I shift it over to Boris. And thank you so much, Leroy, for dropping 20 bucks. You really didn't need to. This is a free live stream, but I appreciate it. I didn't know you could give me money. I'm definitely going to put it to more coffee and Kathy's Caffeinated Market Buzz. Boris, do you want to say hello while we see if there's any questions?
Hi guys, good morning everybody. Hopefully everybody is doing well this morning.
Boris is going to share his views on gold. I know many of you are trading gold.
Yeah, gold took us for a little ride, but we managed to survive the roller coaster. I'm going to talk a little bit about that today.
Do you want to go ahead and take the screen? I don't see any questions yet, but if there are questions, I will let you know.
All right, let me grab the screen.
How do they forecast the figures in the daily FX calendar? They actually pull it directly from the Bloomberg terminal, which is a aggregation of economists' forecasts. So Bloomberg will call all the different economists, ask them for their forecast, put it into the Bloomberg terminal. People pay $6,500 a month for, and daily FX pulls that out and puts it on their calendars. You get it for free, and that's what almost all the calendars do.
$6,500 a quarter, but it's still very expensive.
Of course, they want your views on US 30, Bitcoin, so you can definitely chime in on that.
Okay.
I'll let you share your screen.
Sorry?
I'm gonna let you share your camera. I'm gonna turn my camera off.
All right, it's fine. Hi, good morning, guys. Good morning. Let's talk about gold first. So gold, took us for a real ride this morning. Those of you who were trading early with me, the first sell signal just, was literally selling the bottom, spiked and stopped us out. The second sell signal, I actually took a little bit early just because I wanted to recover some of the losses. But again, I continue to believe that gold, even though, it's acting negative, it's negative on the 1 hour bar, it's definitely a negative trend. Still much more, it's basically a two-way trade, meaning you either are long or flat. I mean, I keep making the mistake of trying to short gold off signals, and generally those are painful half the time, right? Whereas the long signals almost always work to the upside. So it just tells me that I think there's still an underlying bid in gold. Excuse me, just 1 second, guys. Something went down my throat here. I still think there's an underlying signal in gold, but gold certainly is dissipating its rally. Well, there's two ways to look at it. If you look on a longer term chart, let's just even go like on an hourly chart. You can see that, on the hourly chart, it's either you sort of can say, oh, it's just simply yet another 2100 fake out top. But what I think is interesting here is that the 2000 continues to holds all the way, for the last months, couple of months. And that I think is important. It's really the 2000 area that becomes the major key area from which we are all focusing on. Gold certainly suffering, I think, a little bit from the fact that you're getting a little bit of risk-off compressions, and maybe the yields are not coming down as much as they would like to see it. But still, the flip side of gold is sovereign debt risk. And that's a sort of overarching issue. Right now, the reason why it's getting sold and why it's being washed away is because growth is still quite good. So the underlying growth in the economy can kind of cover up the interest rate cost problems that we're having with a deficit. And that may be like good enough for a long term that would just simply create another fake out rally in gold. But to me, the point is that fundamental factor still really weighs on the market, and should the dynamics turn, it's going to be a much more aggressive trade to the upside. So I still basically believe that unless you're kind of scalping like us, and even if you're scalping like us, it's just not productive to sell gold. Generally, although I see a lot of gurus on YouTube jumping around saying gold is a sell, gold is a sell. It may very well be. I just think that the asymmetric bet here is either long or flat. I'd rather be long and flat, and obviously you want to be long when you get the green signals. Right now it's just red signals both on the hourly and on the minute chart. So we should probably stand aside is really the best recommendation I can make. Taking a look, let's just take a look at oil for the time being. Oil to me, I've been a bull in oil, certainly from the 60s and in the mid 60s. Oil actually looks relatively productive. I mean, we just turned bearish right now, really, really early on the 1 hour chart here. But generally, my view is that when you're looking at oil, what you're seeing is pretty decent support here across all the levels around the 70s. And unless we are facing kind of a synchronized global slowdown, which I don't think we are, it's hard to imagine gold breaking the 70 level. To me, basically, I think gold at 72.70, that's the key level. If it breaks that to the downside, there is a major recession risk in a negative case. But for now, it's sort of like buy in the low 70s, sell above 75 to 85. I don't see us having a runaway move here, but gold is sort of a buy to dip trade going forward. Everybody's asking about crypto. I'm actually surprised because what's interesting about crypto is it's having a rally. It's we had the Trader Fest, we had a 2024 conversation about it. Everybody was bullish Bitcoin, and certainly it's acting super well. It's up to 50. But one of the things that's kind of surprising about this rally is that nobody really cares. There's just very few people that are actually participating in this market and are being long here, which is, I guess, a very, very bullish thing. Now, again, I think this is very much a sovereign debt risk trade. And when you're looking at this, from a longer term point of view, this is pretty bullish. There's just, there's nothing to say here. You can't really make an argument against it. Inverted head and shoulders, really, really strong support in the 45s, challenging the 50s. The only thing I could say is that this clearly, are we going to break through the 50s or not is going to be the big thing. I think probably Bitcoin above 50, that creates lots of headlines. That's probably going to create a little bit more momentum to the upside. Probably will have a severe retrace back down to the 40s, but we hit the 50s, come down to 45, 44, even 42, and then hold. Still pretty much a bullish secular trend in Bitcoin, even though really nobody cares. It's just shocking at how little people are trading crypto these days. Probably because I think ironically enough, even though regulatory issues are kind of going away, we'll have to see. I guess one of the more interesting things that we may be following here as 24 develops is, let's say Bitcoin breaks 50, people begin to allocate to the ETF. That obviously is going to be the tail that wags the dog, because more money gets allocated to the ETF, the physical is going to get bought. So could be a trade. It's, certainly not a short. In no way is this a short, unless you just basically going to clip the top, and unless you short here with a stop at 52, just kind of a short, like very, very tight stop. Either just basically punt on a turn, but nothing fundamental here says that it's a secular short. And those are primarily the longer term trades that we're going for. Now on the indices are tired, right? So US 30 is not as tired as some of the other indices, but everything in NASDAQ, for example, is just, I think, the tiredest of indices is NASDAQ. Now we continue to be kind of, secularly long on NASDAQ on an intraday scalp here basis. But, I have very little confidence that, I'm hoping that we just kind of pop for our 25 points and get out of this trade. We're at 9,000 bars long, a 6-day long bullish move in NASDAQ. It's just screaming for a reversal. This trade is just screaming for a reversal. US 30 not as bad. It's only about a 1,500 bar trade and looks relatively benign. Well, you see, I got stopped out on what did I get stopped out on? The S&P, I think. I was trading a small little S&P. Yeah, I just got clipped out on S&P, but that was a small trade. But generally, I think we may have one more final hoorah blast, maybe on the 30. Nasdaq, I think, is really, really vulnerable. Now, you know, if I was just trading speculation, I'd be short Nasdaq. It's just that our setup is still signaling along, and I'm just trying to be very disciplined or towards our setup in the day room. But everything in my mind screaming that this is going to be a short, and we may have a really hardcore unwind as the day goes by, just because we're so deeply overbought on all these positions. That's pretty much how everything stands. Let me see if there's any questions here in the room. But
for those of you that are on YouTube, thank you for joining us. I dropped in our free Telegram channel, so please make sure you connect to that. That's our only official Telegram channel.
Yes.
And we invite you to join us, and you'll get more daily updates there.
You know, I'm super excited about our Telegram channel, and everybody please sign up for it, because what we're going to do, you know, one of the things that we talked about, which we really, really want to do is, you know, we create a whole bunch of content that we really did, free content that we really don't have a great place to publish at, and this creates an absolutely perfect place. We'll be posting blog ideas, we'll be posting observations about trading, we'll be posting videos in there. It's going to be a very, very rich environment for anybody who's interested in all sorts of either both market color as well as general trading information. So I really invite you guys to join it. It's going to be very much a labor of love for us. I'm very, very excited about it. So everybody who's listening to us on YouTube, everybody who's listening to us here, this is going to be a great resource, mainly because it's a centralized single channel conversation where you guys can just pretty much scroll up and down and get a morsel, really great, some morsels of information of everything that we do. So please join us there, and we'll see you guys in the markets. Everybody have a great day.